Hello, guys. Good afternoon. Thank you for taking me every day. So, my name is Noura Musri. I am an enrolled agent and the founder of Noura's Books. I am known as the nonprofit CFO, and I'm here every day during the tax season to just get you informed, have you ready for your taxes, your business taxes, personal taxes, or nonprofit taxes. So if you have any question while we're live, please put them in the comments and I'll make sure to answer your questions if they can be answered on the live. Otherwise, we will connect with you or just make another video about the topic if we can do that. Otherwise, like we can talk directly to you to answer the questions that you might have. For my friends on Instagram, yeah, I'm not there every day, but whenever I am alone without a guest, like I'll try to get on Instagram as well. So today I'm here to talk to you about bookkeeping. I get a lot of questions about like, I haven't done any bookkeeping during the year. Can I still do my taxes? Well, I would be interested to know if that question actually, Ilham, I thank you for joining. If that question crossed your mind, if you think, I would be interested to know what you think. So even if you are listening to me on the replay, write in the comment before I continue. Write in the comment and tell me what you think. So yeah, so to answer that questions, we want to know what is bookkeeping and why is bookkeeping necessary and when it is necessary. So bookkeeping basically it is recording every single transaction in your business in and out, recording every single thing and keeping the receipts, the invoices, anything that will support the transaction you recorded. So, and what I'm saying here not only applies to businesses, it's also applied to nonprofit because everyone, business, nonprofit, and if you have been listening to me, you should know that I always say nonprofit is a business too. So everything applies to that. So if you haven't been doing the bookkeeping, how would you know? How would you know what did you spend? How did you know how much you made? How did you know? How did you know a lot of things? And actually, I've had a comments every time I talk about or ask a prospect about bookkeeping. They would say, "Yeah, I have everything recorded. I record everything in an Excel sheet or in a Google sheet, or everything recorded in my bank account." Another answer I would get, "Yeah, I have my bank account connected to my accounting software, whether that software is QuickBook, Wave, or any other thing that you might be using." Well, is that bookkeeping? That is not bookkeeping. I'm sorry to say, that is not bookkeeping. So what is bookkeeping? So first step of bookkeeping for any business or nonprofit, for any organization, first step of bookkeeping is you need to develop a chart of accounts that does work well with your business. And every industry and every single business will have a unique chart of accounts. Yes, like there's like asset, liabilities, equity, all of these are the same, but the way you report them, the way you categorize other expenses or incomes, it varies. And also, you have to take into consideration with that IRS requirements because that will help your tax professional to do your taxes at the end of the year. Sorry. So it will help your tax professional to do your taxes, so there's not much question, and you will probably be able to take the deductions that you deserve and the credit that you deserve. You have to have that. So again, the first step of bookkeeping is the chart of account before even connecting any software with anything. That's the chart of account. And that's what usually we do for our clients when they want to become a non-profit. I'm sorry, when they want to become a monthly client, or even like to set them up on QuickBook. Usually we use QuickBook because it's just the industry standards, the accounting and finance industry standard. There's a lot of flexibility, a lot of things that you cannot do in other software. So we set the charts of accounts and we meet with the clients, see what they have, where are they at, what do they need to report, and we give them our recommendation on certain stuff, especially when they want to see how do they want to see their reports, so they can take a better decision when they look at their financials. So that's the first step. So we do the chart of accounts, and then once we do the chart of accounts, so let's say, well, before, like when they came up with GAAP, which is the accounting standard, generally accepted accounting principles. When they came up with that, there was no softwares. It was like all manuals. And if you were like heard like from your older generation, like they used to have, I remember, I'm originally from Syria, so I remember when my dad has his business in Syria, he has an accountant who he was holding always, all the time. He would hold like this book, like a huge book before automation. At least in Syria, we did not have automation back then. That I'm talking about the 80s, early 80s, I get. Yeah, 80s, not early 80s, but 80s, early 90s. That's how he had it. So that is where he used to record everything. But now we have those software, makes life easier but more complicated at the same time. Not so easy, because it's easy to overestimate your income. And what happens if you overestimate your income is you pay more taxes. So it's very easy. I've seen it all the time. Even when people use a bookkeeper, not all bookkeeper knows exactly how to use the software, and not all bookkeeper knows GAAP or like understand troubleshooting the system. So you want to see, like, you want to verify who are you working with. Also, when people do their books, like with the volunteers, or maybe her son, her daughter, her sister, or whatever, like, you don't know, it's easy. We're just categorizing the transaction, and that's it. We're done. We've done our bookkeeping. Okay. No, you did not, because this is not accounting again. So first step, you want to do the chart of account. That's number one. Second step is you have to make sure every single transaction, what do you call it? Categorized and in the right category in the chart of account. An example, if you go to Kinko's, for example, and you printed something, that is categorized as printing. But also you went another time to Kinko's, but this time you bought some office materials or something like that. That can be categorized as office materials. So not every Kinko's goes to the same account. So you have to, you have to to make sure, like, to record step by step, keep the receipt, and I would say always scan or take a picture and save them in a folder, or save them with QuickBook or whatever you're using, or at least save them with in a Google Doc, somewhere that you can get access to, like, very easy, and you also can give your accountant access to to verify anything they want to verify if you get audited. So it's easy, and keep them organized per month. So that's what I would do. That's what you have to do actually. So this is, we're not done yet. This is the second step. So again, we said first step is chart of accounts. Second step is categorizing the transaction to the right account. And I want you to put your questions in the chat while I'm talking about that. Even if you're watching on the replay, please ask any question that you might have to make sure we answer your question. I hope this is clear, because I know like sometimes for people who did not study accounting or haven't dealt with accounting, like they might not know. So third step is reconciliation. You might hear someone saying, Rex, I haven't done my Rex yet. We use this in accounting space. So it is reconciliation. So that is when we verify that what you have recorded in your bank account matches what you said you have spent, what's recorded in your software, and make sure everything matches and there's no duplication, there's no mistake and error and categorization. There's nothing missing there and here, because often how many times like you might probably get a cash or paid in cash. Also these you need to record. So, but this is different than the bank account. So if it didn't go in and out of the bank account, you won't record it there, but you still have to record it. But if you deposited cash or took cash and paid it, you need to make sure you categorize it correctly. So that is the third step. So again, first step is chart of account. Second step, categorizing your transaction every single month. I would do it every week or every day if possible, so you don't forget. But if you are using an accountant, you maybe like want to talk to her to see like how do you want to categorize it, or have the sheets that she has access to and just put everything there, like this is the date, this is how much the amount, this is the vendor, and this is what it is for, and then she can categorize it for you. So you want to make sure you have all of that. Also for QuickBooks, for example, there's a workflow you have to go through. So I'm not going to be actually going through every single detail with that, but we can talk about this later sometime. So that is it. So once you do the reconciliation, then you can go to the balance sheets and to the profit and loss and just verify the information is correct and the balance sheet is balancing and your ending balance matches what's in your bank statement, matches what's in the balance sheet. And if you have credit cards, saving accounts, you have to do the same process for every single account. So if you have, so that's like all of them. So if you are connecting your bank account or not, and credit cards, sometimes it's easier not to connect some of the credit cards. It depends on how they do it. Sometimes it's just easier to add them in manually. Less confusing, less work. You verify that is what is done is correctly done, because often I see like for Bank of America, for example, if you have a business credit card, oh God, I've seen a lot of mess with that, because I don't know why they do it this way, but when you transfer it to, when you connect it to QuickBooks, it is a disaster. It shows up like two different accounts and two different balances while it's really one account. So often with these, I prefer that we do them manually. It's less confusing, it's easier, saves more time, but it's manual entries. So once you do the manual entries, you have to do the reconciliation as well. So all your cash account, meaning checking, saving, credit cards, Venmo, PayPal, all of these you have to reconcile. So the more you have, the more work you have to do. If you're using someone to do your bookkeeping, so the higher your bill is going to be. Not recommending that you don't have to have a lot. Yeah, I mean, obviously, I actually recommend to have like multiple bank accounts and credit cards, because for business reasons, like you should have it. And just be aware that you're going to be investing more money to make sure everything is done correctly. So which is not a loss. It's actually what you need to be doing. So that is, in summary, bookkeeping. Then you can generate your balance sheet, your profit and loss, and that you can say, okay, it's a clean record now. Like you have the balance sheet, your profit and loss, and that is done month by month until year end. So you will be able to generate an annual report, an annual balance sheet, and profit and loss that is going to cover the entire year. And then you can give that to your accountant. Well, to answer the question that we ask on this title in this video, like, can you do your taxes without doing bookkeeping? You can do your taxes without your W-2, without your 1099, without your 1098T, because you just didn't provide that to your accountant, or you missed that document. You still can file your taxes. It doesn't mean your taxes will be correct or accurate. It doesn't mean you will be able to get all the credits and deduction you are entitled to. So that's what you want to be aware of. So the answer is yes. Will it be correct and accurate? No. And you have to remember is tax return, bookkeeping is not something you choose to do or not. It is actually a compliance work. It's something you have to do. You have to do to file your state taxes. You have to do to file your sales taxes. You have to do anything. If you can do a sloppy job and don't do it and just do a sloppy taxes, you will pay for that later. The money you think you saved during the year or years, it's gonna come one time and it will hit you, and you will have to pay thousands of dollars in audits, recovery, and you're already paying actually that cost. You're paying that cost because you are not doing your bookkeeping, because you are not taking credits that you deserve. You are not ready to get financing because you don't have an accurate balance sheet and balance profit and loss. So you're paying the cost. You just you don't see it yet, but I promise you, sooner or later you will see it. It doesn't mean that if audit did not happen, or if you didn't get any compliance issue like review or anything, that you're never gonna get it. Eventually it will get to you. So when IRS wants to target someone, or some category, like we said, like we didn't say now, but the IRS like increased the budget for auditing, and guess who they come after? A small business owner, nonprofits, all of these people, probably before to the small business owners, because it's easy target, easy money. Even if they didn't get it right away, it will be billed to you. And I've seen a lot of disasters. Actually, before I continue, I want to share my banner, the way you can contact us. So I have seen a lot of disasters where people recorded their loans as an income, and guess what? They're paying taxes on that because it's income now, while your debt, like when you take a loan, that is not taxable because this is not income. But I've seen people recorded that as an income. I've seen people who uses bookkeepers and accountants record that as income. Now, it might not be the accountant fault, because maybe the business owner did not tell her what is that. But yeah, as an accountant or a bookkeeper, she shouldn't assume, she should ask. But yeah, guess how many business owner would be paying so much in taxes? And for my friends on the nonprofit side, yeah, you might not have to pay taxes on everything, most of the thing, but they will be checking, you will be audited and they will be checking your records. You have to have an accurate record, and you can lose your exempt status with just because bookkeeping was not done properly, just because you didn't do it by the IRS guidance. So you want to make sure you do a proper bookkeeping, accounting. It's not something luxury. It is essential for every business. It is essential. And you shouldn't be price shopping, because I have seen price shopping what have done to people. Unfortunately, there's not a lot of education about that, and people think, oh, I can't afford it now. Like, you will pay the price later, sooner or later. And when you are price shopping, you're doing your business or nonprofit a disservice, and you will pay for it. That's why there's a reason actually why a lot of over 50% of the small businesses fail to exist past 5 years. And a lot, I don't remember the percentage, but also for the nonprofit, same thing. They don't exist, or maybe they are there, but they don't really do anything significant. So if you want to succeed, if you want to be different, if you want to go to the next level with your business, with your nonprofit, with anything you do, you want to make sure you do these properly. You want to make sure like you have a good marketing. You want to make sure you have a good accounting, because marketing and sales like mean sales, like, because no sales, no business. But also bookkeeping, accounting, also cash flow management, which is like to the second level, like sort of CFO services, and also the compliance work. That is a must. That is not a choice. So cash flow management is not a must. It's up to you. But if you don't do it, you will be short in cash. You don't want to be in that position. So that's it. So yes, while you can do your taxes, it's not gonna be correct. It's not gonna be complete. I don't recommend it at all. Do I help people do their taxes without doing bookkeeping? Yes, I give them the trust. I tell my clients, okay, you have to do your bookkeeping, and we can do bookkeeping cleanup. It costs money. If they're ready for that, we do that for them. If they still insist they don't want to do it, then we send them Excel sheets to fill in, to make sure we get them as much deduction as possible. And it's on their own responsibilities. We tell you that you have to substantiate what you have, and you have to have it for your record. But I can't take numbers like just assume, like I don't do that from your bank account. I don't do that from your shoebox receipts. I don't do that. Well, if you want me to do that, well, I have to charge you a huge bill for that. Then, yeah, we can try to do that. But it's like much more expensive than doing bookkeeping. So you want to make sure you do your bookkeeping month by month, so you don't have to pay so much and tears and disappointment and money later. Because what you don't want to pay now, when you're happy, you will have to pay later 10x, 20x more when you're crying. So don't do that. Don't be in that situation. I love you. I don't want you to be there. So please take responsibility of your business. And there's a lot of great accountants over there, a lot of great bookkeepers. Go ahead and contact them, see who you want to use, see who you are comfortable with, and get to them, and make sure you have your books ready for taxes. If you don't have one, I would love to help you. Me and my team can help you do that. And if you are an S Corp and you haven't yet done your bookkeeping for the year for 2022, that means that you have to do cleanup, which means you probably have to do an extension at this point, because deadline is coming, unless you do that very, very fast. and be very responsive in uploading all the documents you need and everything, providing your accountant with everything. So we still can take a cleanup for S corp and all type of businesses, but you need to be really fast, and it depends on how bad your books is, or your books are. Then we can decide like if it's gonna be done, if it's logical to be done before the deadline, or we have to do an extension. And remember, if you do an extension for your S corp, you will have to do an extension for your personal return. That's it. And again, before I leave today, I want to remind you that we are running a promotion, a very limited time promotion. If you pay for your tax return in full in advance, you will get 20% off, and sometimes it's going to be more than 20% off. So this is a very limited time promotion. So if you are interested to take advantage of this promotion, you can sign up. You can actually, for that, because it's very limited time and limited space, please email us at contact@nourasbooks.com. I put the email in the screen. So if Instagram, you won't be able to see that, but you will be able to see that in all other platforms. Again, email us at contact@nourasbooks.com and put in the title, subject line, put want to take advantage of 20% promotion for tax return. Do that, and we provide your phone number, and we will be able to contact you. And also, like we want to know, like, what do you want to do? Do you want to do your personal, your business, Schedule C, 990, 990, whatever it is, like you have to do, so we can send you the invoice. And once you pay in full, like right away, that you are in already and you reserve your space, and we will get you on the portal actually and send you everything. If you need to talk to us or to me, like, we can definitely schedule a call, but I wouldn't wait to schedule a call, because if you want to take advantage of this offer, because it's going to end any time once we get fill in the seats that we decided that we want to have for this promotion. We're gonna end it, and it's filling very fast. So make sure to take advantage of that. And if you have already done your taxes and know someone who might be interested, I'll be happy to receive a referral. So thank you for that in advance. And that's it. And as you know, like, Linktree has a lot of resources, and I will see you tomorrow. Let me know if you have any question. I don't see any question in the chat. Thank you for everyone who attended the live. I've seen a lot of people coming and leaving. So thank you. I love you all, and I hope you have a smooth tax season yourself, and for us, and for me and my team. So again, we are looking forward to working with you. Don't forget your bookkeeping. You want to take advantage of everything you deserve. All right. Have a great day, and see you later. Bye.